Hello, hello, hello. It is Friday. Thanks for watching NTD Business. I'm Paul Greaney. The top business stories today. Joe Biden clarifies his tax policy. He says he won't repeal all of President Trump's tax cuts. Market news. Two of the three major indexes snap a three-day losing streak. We talked to Nick Rees, who says things are looking up. American consumers just keep on spending. Retail sales are up for the month. And luxury merchandise is being shoplifted in New York City. We look at which stores are getting hit. Former Vice President Joe Biden clarified his position on repealing President Trump's tax cuts yesterday. He said he will only repeal the tax cuts for those making over $400,000.
At an ABC town hall in Philadelphia, a voter asked the Democratic presidential nominee on reversing the Trump tax cut. Here's Joe Biden's answer.
And I said the Trump tax cuts, about $1.3 trillion of the $2 trillion in his tax cuts went to the top 1/10 of 1%. That's what I'm talking about eliminating, not all the tax cuts that are out there.
Biden has said before he intends to repeal Trump's tax cuts. He also promised not to increase taxes for anyone making less than $400,000 a year. The two statements clashed because Trump's tax cuts resulted in savings for the vast majority of U.S. households, which would be erased if the cuts were repealed. The town hall moderator, George Stephanopoulos, asked Biden why it would be wise to raise taxes during an economic downturn. Biden pointed to a Wall Street analysis saying his plan would create millions of jobs. He said it would cause the GDP to grow $1 trillion more than under Trump's plan. The Moody's report predicts that a Democratic sweep scenario will create nearly 9 million more jobs than a Republican sweep in the next decade. President Trump signed the Tax Cuts and Jobs Act in late 2017. It fueled an economic boom, but activities came to a halt due to the lockdowns. While the stock market has recovered, unemployment remains high. Both presidential candidates plan to make changes to the tax code, but largely in opposite directions. While Trump plans to further tax reductions, Biden plans to raise taxes on the high-end businesses. Biden would give tax breaks to those who buy electric cars, install solar panels, or make their homes more energy efficient. Trump would expand the opportunity zones in depressed areas, give tax breaks to companies that bring manufacturing back to America, and place tariffs on imports of offshored goods.
And the Republican National Committee has filed a complaint with the Federal Election Commission against Twitter. Twitter blocked people from sharing negative media reports about Joe Biden's son this week. Republicans say its suppression of the article is an illegal political contribution to the Biden campaign. The committee says campaign finance law doesn't allow corporations to make contributions to federal candidates during an election. Right now, though, social media companies aren't liable for third-party content. They're considered platforms, not publishers. But late Thursday, the FCC said it will clarify the meaning of that particular law. And Twitter says it blocked the links because they called it hacked content, and that violates its rules. But the emails were reportedly found on a computer that was left in for repair rather than a traditional hack. During the 2016 election cycle, of course, the Democratic National Committee email server was hacked and emails were leaked through WikiLeaks. Many say this was one of the reasons Hillary Clinton actually lost the election. After that, Twitter changed its rules to ban what they called hacked information. But just today, just breaking news actually, they announced they will lift that ban. Here's the details.
A Twitter representative says the company will no longer remove hacked content unless it's directly shared by hackers or people working with hackers. Twitter's policy and legal head Vijaya Gadde says Twitter will label tweets to provide context instead of blocking links from being shared. She said the changes were being made to address the concerns that there could be many unintended consequences to journalists, whistleblowers, and others in ways that are contrary to Twitter's purpose of serving the public conversation. Twitter received backlash after blocking the New York Post's article about Hunter Biden. The company added warning labels to tweets. It prevented users from posting links to the articles, and it also locked out some users who shared the article, including the White House press secretary. The Post story alleges that Joe Biden may have lied about not meeting with a top Ukrainian gas firm executive when he was vice president. At the time, his son, Hunter Biden, held a paid position on the board of the gas firm Burisma. Twitter's representative says the company will give more details as it updates its policy pages.
And a very quick update on the stimulus package. I know people probably don't want to hear any more. House Speaker Nancy Pelosi says Democrats won't give up on it, and she told her constituents that help is on the way. Just hope nobody needs it in a hurry. And Americans apparently kept shopping in September. Retail sales are up for a fifth straight month, even beat estimates, up almost 2%. Clothing sales and department store sales up around 10 to 11% each. That's good news. And car sales were up nearly 4%. Consumers also feeling more optimistic. Consumer confidence for October is as high as it's been since March. Other data out, though, is not so positive. U.S. industrial production fell 0.6% in September. It's the weakest number since spring. One analyst saying it may be a sign the recovery is losing its momentum. And all three indexes ended pretty flat today. The Dow just broke a three-day losing streak and closed higher, as did the S&P 500. Nasdaq, though, couldn't keep pace. It ended a little lower. Overall, the Dow rose about 112 points, or 0.39%. S&P 500 gained less than 1 point, or just 0.01%. The Nasdaq dropped over 42 points, or 0.36%. All three indexes, though, posted gains on the week. About 1/10 of the S&P 500 companies reported earnings already this week. Nearly 90% of them cleared the, well, let's say low bar set by their revenue expectations. It's according to data from Refinitiv. That may be reflected in the company's stock price. The S&P 500 companies are moving up together now. Just after the crash, it was really just the mega cap stocks, Facebook, Amazon, Google, and the likes that were rallying. In technical terms, it means that there's better market breadth. Nick Reese is senior portfolio manager at Merck Investments. He told me it's a positive sign for the market.
Sure. Well, there are a couple different ways of looking at market breadth, but two of the indicators that I like to track are the cumulative advanced decline line, which has recently been proceeding to make new all-time highs, even though the broad market index, the S&P 500, isn't yet back at new all-time highs. So when you see that cumulative advanced decline line pushing to new highs, that historically signals that the market will likely push on to new all-time highs as well. So that's a ratio, or it's just actually comparing the number of advancers versus decliners each day, and then adding it to the previous day's total. That's the cumulative advanced decline line. So the number of members that went up on the day versus went down within the S&P 500. The other common way of looking at it is the percentage of S&P 500 member companies that are above their respective 200-day moving averages. And we've seen that at really healthy levels recently, around 75, 76%, even though the overall index, as I said, isn't quite yet back at new all-time highs. And so that's a much more encouraging picture than we saw, a few months ago. And there's a lot of talk about how this market's being pulled higher by these mega cap tech stocks, and I would certainly agree that that's market leadership and that's an important segment of the market. But it's important to remember that these there's what we call broad participation with the rest of the index as well, and that's generally a healthy sign that we're in an ongoing bull market.
And we have this other thing called margin debt, and basically the way I like, very simplistic way to look at it is people taking out money or borrowing money to buy stocks. Of course, they're levered stocks. People don't have the cash, so they borrow the money and buy the stocks. In your report, you say this is ticked up as well. Is this something people should worry about, that there are more people buying levered stocks, or?
Well, I think it's important to keep in mind that, yeah, we are seeing the dollar value of margin debt go up, but that's in line with the market going up as well. And so if you look at the ratio of margin debt to the overall market, that's actually not at a concerning level. What would get concerning is if we see margin build up sort of relative to the advance in the market. That's what we saw leading into the major market tops, both in 2000 and 2007. We didn't see a big margin debt buildup pre-COVID crash. And I suspect that given how rates how low interest rates are, we might see margin debt gradually increase even relative to the market, potentially over a multi-year time horizon, and eventually end in a similar fashion to those previous major market tops where we do see an over-levered market. But I don't see that in the indicators right now.
And of course, if we see an over-levered market, it means that the stocks go up much faster in price, but they also come down much faster in price if there is somewhat of a crash, right?
Certainly. I mean, if you're buying on margin, you're sort of it's sort of you could think of it as buying power, artificial buying power, and then if the market's going down, you've got to close those levered positions. So you're right that it creates upside and downside volatility. It creates a less stable market, I would say. But right now, as I mentioned, the margin levels that we see are not what I would consider unhealthy.
And very quickly, you mentioned in your report that it's hard to predict the winner in any election season, but it's even harder to predict how the market might react to that winner. So you're not really recommending people to speculate on it this year, right?
Right. I mean, I think that, people should stick to their long-term, horizons and long-term, asset allocation plan. For example, we've seen a big rise in solar stocks relative to oil and gas stocks. You can envision maybe that's, positioning for a Biden victory, but then you have a dynamic where you could have a buy the rumor, sell the news. And if Biden does win, there's a big blue wave, that's already been priced into the market. And so there's no further, sort of outsized gains to be had in that kind of trade. So very, very difficult to predict the outcome, and even more difficult to predict the market reaction to that outcome.
Very interesting. Nick, appreciate it as always. Thanks so much.
Thanks, Paul.
And luxury stores like Burberry and Gucci are being terrorized in New York City. Shoplifters are stealing items worth tens of thousands of dollars there. NTD's Phil Zoe spoke to a police officer and some people out in Soho to find out more.
High-end stores in Soho, New York City are getting terrorized by shoplifters. It's been happening for a while, but it's getting worse.
And you have a group of kids, transients, that go into the stores, pretty much get as much as their hands can hold, and they run out. The stores that are being hit are high-end, Gucci, Lacoste, you name it.
Local businesses are also noticing it.
There's been a big problem of shoplifting. Ironically, someone got arrested from Burberry today, about a half hour ago.
Was a robbery in the store right there about 2 weeks ago.
Residents wonder why there are so many kids walking into luxury stores.
What are they up to? I see lots of young people walking around going into the shops, but I don't know if they're shoplifting or buying.
People are noticing more police officers around.
Lately, the last 2 weeks, I see some police being here a lot. I didn't see that from before.
When I set up today, I saw a bunch of cops show up to take a report from a theft that had previously happened, maybe yesterday.
Under New York's bail reform law, people who commit certain non-violent crimes like shoplifting are released immediately without cash bail. In other words, they don't have to pay any money to be set free after being arrested.
Because of the anti-law and order politicians and judges which are allowing these individuals to go out there, steal boatloads of merchandise, and be released the very next day.
Some people say it's not just happening in Soho.
I live in the South Street Seaport, and yesterday there was a big red Tesla parked across the sidewalk.
It seemed like it was organized crime because it's not. The people who were doing it came in driving fancy cars.
With an increase in shoplifting, businesses are warning each other to be more cautious, especially with the upcoming holiday season. Phil Zoe, NTD News, New York.
And a possible exemption to a California labor law is now up for debate. Voters must now decide if Uber, Lyft, and other rideshare drivers should remain independent contractors or be eligible for the benefits that come with being full-time employees.
Voters in California are weighing whether to create an exemption to a new state law. It would aim to provide wage and benefit protections to rideshare drivers.
The Proposition 22 is a ballot measure that really is in some ways a battle between big tech, between, say, Uber, Lyft, DoorDash, Postmates, and big labor.
Uber and Lyft are both headquartered in San Francisco. Both have said they may leave California if the measure fails. The landmark labor law is known as AB 5. The legislation threatens to upend the app-based business model. The gig economy offers great flexibility to drivers who can work whenever they choose, but in exchange, they forego protections like minimum wage, overtime, health insurance, and reimbursement for expenses.
I started doing this job because I was on disability and I needed to make extra money. And it was convenient for me to get a job that I could do on my own schedule.
Democrats in the state's legislature passed the law last year. Uber and Lyft have maintained that their drivers meet the criteria to be independent contractors, not employees. They also have argued the law didn't apply to them because they're technology companies, not transportation companies. They say drivers are not a core part of their business. If Proposition 22 passes, it would exempt app-based transportation and delivery companies from the labor law.
And still to come this evening, a security firm raises concerns about a kid's smartwatch. It says it can be used for spying and that it was intentionally designed that way. And British Prime Minister Boris Johnson gives a warning. The UK must now prepare for a no-deal break with the European Union. He says the EU doesn't seem to want a deal, but the EU says it's London that won't compromise. Find out more after the break. Welcome back. A Norwegian security firm says one kid's smartwatch can be used to spy on the wearer. And there are still questions over who exactly has access to the data. NTD's Patrick Hayden reports.
A new report says the Explorer 4 children's smartwatch can be used for spying. 365,000 of these smartwatches have been sold globally. The report found a host can take control of the phone by sending it an encrypted SMS message. It can then secretly take pictures, record audio, and even track the location of the wearer. Norwegian security firm Mnemonic uncovered the risk. The watch manufacturer told us they fixed the problem by updating the watch's software, but Mnemonic says that that's irrelevant. It says, this ability to issue wiretaps or take secret pictures over SMS is not a software vulnerability, a misconfiguration, or an oversight in using outdated protocols. This functionality has been created with intent. What's even more worrying is the watch manufacturer has links to a company in the US entity list. Chiho 360 is blacklisted as a national security risk. Mnemonic say the code was developed by Chiho 360. It also said the phone communicated with servers in China during their testing. An Explorer spokesman said that the watch just communicated once with the Chinese server, the first time it was turned on. It says any private data on the device would only go to its server in Germany, not China. Patrick Hayden, NTD.
The UK's Prime Minister Boris Johnson says it's time to prepare for a no-trade deal Brexit. He says that's unless the European Union fundamentally changes course. He says there's no point in talking anymore otherwise.
A no-deal Brexit may just have come a step closer. UK Prime Minister Boris Johnson on Friday gave his response to the latest meeting of EU leaders. He says Brussels has shown no willingness to compromise and the UK should now prepare to go its own way.
I've concluded that we should get ready for January the 1st with arrangements that are more like Australia's, based on simple principles of global free trade. We will prosper mightily as an independent free trading nation, controlling our own borders, our fisheries, and setting our own laws.
Johnson's comments follow an ultimatum from EU leaders: compromise on key sticking points or accept a no-deal departure. Agreement remains elusive on fishing rights, state aid and how to resolve future disputes. And Brussels says it's London that won't compromise. Speaking earlier, EU Brexit negotiator Michel Barnier said he wasn't giving up yet, though.
We are absolutely determined to reach a fair deal with the UK. We will do everything we can, but not at any price. Our positions have been crystal clear from the day one of this negotiation. If you want access to our market of 450 million people, there must be a level playing field.
Opponents of Brexit say a no-deal departure could sow new chaos just as the global health crisis shows signs of resurgence. Many on both sides of the debate will still be hoping for an 11th hour deal.
And staying in Europe, Daimler shares surged 4.5% today after luxury car maker posted its third quarter results, beating estimates, thanks to better than expected rebound in sales of luxury cars in September. Who would have guessed? Swedish truck maker Volvo also posted three-quarter core earnings. They were also well above forecasts, thanks to another healthy jump in orders.
Two of Europe's big car and truck makers are offering surprising hopes of recovery. Late Thursday, Daimler said third quarter pre-tax earnings hit almost $3.6 billion. That's close to $1 billion better than analysts had forecast. The Mercedes-Benz maker says demand for luxury cars has rebounded strongly. That after a slump in sales pushed it to losses in the previous 2 quarters. It's now moving to cut costs too. Moves include stopping building sedans in the US to focus on more profitable SUVs instead. Overall, Daimler aims to cut fixed costs and other expenditure at Mercedes by more than 20% by 2025. Hours after the German firm's results, there was an arguably bigger surprise from truck maker Volvo. The Swedish firm breezed past analyst estimates, posting a third quarter operating profit of just over $800 million. After halting much production earlier in the year, Volvo said orders in the latest period were up 61% on the year. That gave the company the confidence to reintroduce market forecasts. It predicts European heavy truck registrations will fall 30% this year, with the US down 35%, but with both seeing some recovery in 2021.
And still to come this evening, producers of a French delicacy promote their product. It's been a bad year for restaurants and they want more people to try it this Christmas. Welcome back. Sales of a French delicacy have hit a major slump. But to combat the pandemic-driven stall, Foie Gras producers are pushing for an end-of-year surge. They're working with food distributors to promote the product.
French producers of foie gras are urging customers to eat the delicacy for Christmas. They're even staging a foie gras week at the start of December to raise awareness about the product. It's an attempt to make up for a demand slump from restaurants because of the CCP virus restrictions. Global demand for premium foods has plunged since the spring. Many restaurants remain shuttered or are operating at partial capacity.
We have suffered a lot during this period. 60% of our volume is directly affected.
Producers' hopes now rest on year-end festivities. They traditionally account for about 70% of total foie gras sales each year. To boost Christmas sales, the foie gras industry has arranged marketing events with major food retailers.
There are partnerships with the restaurant industry, with the Foie Gras Week that will take place on the first week of December. Activities like open house days that have been taking place at the producers' farms on Heritage Days in particular.
Foie gras is considered a gourmet food in Western and Asian cuisine and a piece of French culinary heritage. But the practice of force-feeding ducks or geese to make it is condemned as cruel by animal activists.
That's the latest business news for this week, I'm afraid to tell you. Thanks so much for watching. Have a great weekend. We'll see you Monday.